Welcome to the Zions Bank Economic Update. My name is Joseph Mayans, and joining me is senior economist Robert Spendlove to discuss the current economic conditions. Robert, we've had a pretty busy couple weeks here. A lot of economic data coming out. We had the recent Fed meeting, we had the latest employment report, and we had GDP. Let's kind of walk through some of those, maybe starting with the Fed, where we've seen kind of a change in message from them. What have we seen?
Yeah, so the Fed just met recently. In fact, over a period of about a week, we had several really interesting economic indicators.
Yeah.
So the Fed met, they meet pretty much every other month throughout the year. But what's been significant has been over the last three meetings, the Fed has cut interest rates by about 1/4% each time. But then the Fed kind of signaled with the latest meeting that they might be done. So we see that the Fed has had a long period of increasing rates. Here's where they started cutting rates, and then the question is, what do they do from here? In their statement, and that's where we really pay attention to Fed meetings, is their statement. Absolutely. They said they feel like the rate where we are now is appropriate given our current economic conditions. So they're sending a signal: we're done cutting rates. We're, probably done increasing rates. So they're just going to be kind of in a holding pattern for the next little while.
Right. And I know after the meeting, Fed Chairman Powell, he typically gives a press conference. He always gives a press conference. And in that, he said, look, we feel that the economic conditions overall are pretty good. The labor market is still strong, and we're seeing still some moderate growth in the economy. We just had the latest employment report out. Did those numbers back up what he said about the labor market?
Yeah, so the Fed has always said they will be data dependent. And that they will not be influenced by the administration or by the stock market or by outside factors. They say we are going to be data driven. And so when you start to look into the data, you see why they've kind of decided this. So when we talk about the monthly jobs report, comes out the first Friday of every month. And it's really one of the most important indicators of what's happening right now in our labor market. And often we'll just focus on the top line number, but you really have to look at the expectation versus the actual. Where do we think the economy is going to be going versus where is it actually going? And that's what was the big story in the jobs report. So we're expecting the labor market to slow pretty significantly down to a growth of 90,000 jobs. Where did it come in? Came in at 128,000 jobs. So that's a big surprise to the upside. Unemployment rate, we're expecting 3.6, we got 3.6. Private payrolls, again, the private sector, we're expecting it to slow to 90,000, it's at 131,000. Wage growth, right about our expectation, but then this is a big one. We're expecting the labor force participation rate to be at 63.2, came in at 63.3. Small change, small difference, but it's higher than that expectation.
And I think if you break down the numbers a little bit, if you kind of look at the trends, you still say it's a good report, and yet you kind of see overall job growth it's coming down. The unemployment rate actually ticked up from 3.5 to 3.6%. Given these expectations and given the trends, why was it still a good report?
Yeah, so and that's the struggle is we're definitely seeing slowing economy, slowing economic conditions. But the fear was, and even as recently as just a few months ago, the fear, and we're still wondering this, we're still trying to figure it out, is the economy headed into a recession? 6 months or 9 months ago, it seemed much more probable that we could be slipping into a recessionary period. But with this, what we're seeing now may be showing some signs that we can withstand that. And with the Fed's cuts kind of move through while still having a slowdown, but being able to withstand some of those drops. So you see that with our monthly job growth, slowing from 220,000 in 2018 to 167,000 in 2019. And you see that slow. We went from about 175,000 in August to 128,000, but again, it's higher than we were expecting. The other dynamic going on, two what we call temporary or transitory impacts was, number one, the impact of the GM strike. Those people were not on payrolls during that time, so they essentially subtracted from that. And then also the temporary census workers that were added in were taken back out. So that should have dragged down that number, or it did drag that number by another about 60 or 70,000. So it's much higher than we were thinking. When we look at the unemployment rate, we see a similar trend. Yes, it's down in the long term, but it rose just a little bit in the last month. But one thing to look at, if you look at this closely, you notice that unemployment fluctuates. And so this is kind of represents a fluctuation. But also, you have to take unemployment in context with labor force participation. So unemployment went up, but look at this, labor force participation also went up. Highest level in 6 years. So what that represents is that we're pulling more people off the sidelines into the labor force, which helps explain why that unemployment rate would go up.
Right. And so in addition to the labor market, Fed Powell, he talked about the economy as a whole. You know, gross domestic product, we just had that report out. What were the trends that we saw there and anything you paying attention to?
Yeah, another interesting report came out right around the same time as the jobs report. So overall economic growth slowed from 2% down to 1.9%. But again, the expectation was for it to slow down to 1.5%. So even though it slowed, it didn't slow as much as many people were thinking and many people were fearing. So that's a good indicator. When we start to dig into the parts of GDP, you start to see some interesting trends as well. So we're looking at business investment in green and consumer spending in blue. Now, consumer spending is the most important part of the economy. So we've seen, you can see this downward trend in business investment. And this isn't one of the areas that we're very concerned about, especially with the manufacturing sector. But consumers, while spending a little bit less, continue to hold up. And consumer confidence, while it's a little bit lower than it's been recently, continues to show that people are willing to spend and feel good about the economy.
Great. It's going to be interesting to see how some of these trends develop through the rest of the year and see if the Fed in their last meeting in December, if they can stick to their guns and keep rates level.
Yeah, absolutely. It's going to be a very interesting next few months.
Thank you, Robert. Thank you for joining us for this economic update. For more information and analysis, please visit zionsbank.com/economy.